Welcome to the Good Lying Greater Good. So yesterday, as I was preparing my normie newscast, most of the news cycle was talking about the declared bear market, and I realized that I probably didn't want to just talk about the bear market in the normie cast. I wanted to talk about overall my thoughts and feelings on the economy on a larger, longer form video. So basically, as I was prepping stuff, I pulled up. Well, I came to the conclusion. First of all, I came to the conclusion that what we're looking at is the end of the 1983 movie Trading Places with Eddie Murphy and Dan Aykroyd playing Valentine and Winthorpe. And at the end of the movie, the two protagonists they steal a report from the United States Department of Agriculture, and they replace it with a fake report, so their two antagonists can get the fake report that say that the orange crop in the year is going to be down, and then that allows Valentine and Winthorpe to short the futures contract for orange concentrated orange juice. And I'm not a dumb person. Uh, to this day, some of the ins and outs of what they did can really escape me. Uh, but I understand it. I'm just some guy on the internet that likes to think I'm not a stupid guy. Um, but what's happening right now is this plot in kind of reverse. And so I came across this yesterday. This is a 2018 article for Forbes declaring that the recession is overdue by 4.5 years in 2018. And, again, we have really, really stupid experts coming and talking about stuff that they should be the quote unquote experts on, when some guy on the internet back in 2007, the aughts, when the housing market popped, everybody remembers that. And we had no recovery from that until literally Donald Trump was elected president, because the Obama administration and their policies really suffocated the economy for almost a decade. And literally the day that Donald Trump was declared the incoming president, the president elect, uh the economy had an upswing, because at that point the economy is like, hey, we're probably going to get some oxygen, we can breathe, we can start taking risks. Because at the end of the day, the economy ends up being about the faith, the illusion, I should take risks or I shouldn't take risks. And again, getting into the concept of how much the government incentivizes things versus how much they disincentivize things, the overregulation and the taxation, all these things are going on. That's what causes the economy, because for lack of a better way to put it, a true free market economy has never been tried. That's a joke at certain communists. So I'm looking at my notes here, trying to not do a very rambly, crappy start and stop video. And good old Einstein once said, "Genius is making complex ideas simple, not making simple ideas complex." And the reality of the economy is it's really simple. It's We live in you know a supply and demand economy, and if the more there is a demand, the more hopefully people go out there, they take risks and uh, supply that demand. And if there isn't a demand, some go-getters take risks, and they might start up a company in order to create a supply to which there would be a demand for later on. So going back to, '07, '08, and the economy never was able to get back on track, because like I said, it was just getting suffocated. And the experts at the time were, during the Obama administration, were never like, knock this off, deregulate, get out of people's way, and just allow the economy to function, because the experts that the Obama administration brought in didn't view the economy that way. They were the experts, and they saw it. And then I don't want to get down the rabbit hole of the different economic theories that are primarily out there, but at the end of the day, like, you know, it's really easy to break it down and say if you get out of people's way, they will find a way to do their business. And then when government incentivizes something, obviously you're going to see a run on it. That's sort of what people talk about with recessions. Literally, you could define it a recession as like 2 quarters of GDP that goes down, domestic growth that goes down, just like you could define a bear market as 20% drop from a high. That's when someone declares a bear market. Reality of it is we've been in a bear market for a while. We've been in a recession for a while, and we're waiting for the quote unquote stupid experts to say it's okay to do one thing or another. Just like they never pointed out that uh the Obama administration was choking the economy until Trump came in, and all really Trump did when he got elected was not be the guy that they thought was going to suffocate the economy. It's just the people had faith that Trump was going to be more business or pro business than the Obama administration was. So what's going on right now for those people out there that are curious, because the stupid experts have been missing the tea leaves for years at this point, because like that Forbes article in 2018, there was no point on having an economic downturn by the numbers, because if you haven't had growth, which we didn't really have growth under Obama, the economy can't overheat because of government intervention. So that means that it can't explode and therefore need government intervention. Um, it can only overheat once it has the ability to create risk and then have that risk blow up because people are stupid and the government and other social devices are stupid. So in this case, the not stupid experts, the common sense people, and I'm not going to pat myself on the back, but have been talking about a potential tech bubble, a stock bubble that's been going on for a while. And what we can discuss is that it's primarily, uh, for lack of a better way to put this, is primarily happening in California because of Silicon Valley. You have a lot of tech startup companies out there that were being funded by uh, investment groups that were throwing money at any tech company because they were trying to get ahead of the next initial public offering, getting it at the ground floor, and then be able to sell out and run away with all this cash. So they don't actually care about whether or not the company has long-term viability at all. They care about, can it hit to the point where we can manufacture value in the zeitgeist, sell it on the stock exchange, and get out. Or we can hold on to the stock and then it becomes the next Amazon stock where it's $2,000 a share before the split. So the idea is most of your companies that you invest in are going to fail, but if you're only putting a few $1,000,000 into these companies, and eventually you can get them priced at a few billion, then what's a few $1,000,000 when your investment is going to be some ridiculous multitude of the original investment? And that's what was going on, and a lot of people were worried about that tech bubble uh, going in. That's going into the about 2018, I guess you could put it at. So that was the worry. So if the economy actually recovered from 07, 08 in 2016, when Trump won the presidency, then your stopwatch starts. That 3.5 years or so until the bubble hits, which would put it roughly somewhere in mid 2020. Well, coincidentally, what happened at the beginning of 2020 is we have the pandemic and the lockdown, and depending on where you live, the lockdown either happened longer or than someplace else. So now your clock gets stopped. It literally gets stopped when when the economy gets stopped, and whatever potential possibility that there was that the upturn was going to burst after about 3 years and change. It gets stopped because the economy gets stopped, because that bubble was always growing. It was always getting bigger because people were taking more risks in these tech companies that were never going to pan out, because it didn't matter if it was a good idea. It mattered if it could be marketed. As you stare at ESG scores, because I have my eyes closed. So the reason why I have ESG up there is because part of the issue with why this bubble was growing is because certain investment companies were more concerned with creating this concept of an ESG score, environmental social governance score, which has less to do with if a company is has a functioning business model, and more to do if it has something with greenwashing, um, which is I'm trying to look like I have environmental concerns, but I'm just spending money to look like I have environmental concern. If I'm hiring the right people, i.e., you know, certain immutable characteristics that the person can or cannot have anything to do with, if I'm checking the right ideological boxes, that's what an ESG score is. So this, I can't pull this article up unless I would have already tried, because it's behind a paywall, but it's talking about how suspended executive greenwashing crackdowns and Elon Musk jabs are hitting at sustainable investing. Well, what is sustainable investing? Well, again, I just put in sustainable investing in the internet, and it starts talking about ESG. So ESG over here, it says sustainable investing is about investing in progress and recognizing that companies solving the world's biggest challenges may be best positioned to grow. It is about pioneering. It's shit, right? What is sustainable investing? iShares BlackRock. So BlackRock, Vanguard, and State Street are going to be coming up here a lot as investment companies that are following this ESG model, that have nothing to do with, is the company profitable from a traditional standpoint of goods and services in exchange for money. This has to do with social engineering. Is the stock have anything to do with social engineering? Is the company trying to make a better world instead of a better mousetrap? So as I pull this down for a second, so I can think, so you can stare at Eddie Murphy and Dan Aykroyd. So this is what's going on, and the dum dums on the internet, anybody with common sense that was paying attention to this stuff, has been throwing up the wrestling X sign, the hey, cease fire on this stuff, because like we're not going to a good place. And I have all these other articles I could pull up about how bad the economy is, and it's taken this long for the government to realize that they've created uh, a a a bigger problem because of how they've decided to handle the pandemic shutdown, that on top of the bubble that is either burst or is about to burst. So what's happening recently with inflation is, again, going back to trading places, where they're trying to get a hold of a report before it happens. Well, the guys on the stock exchange floor, they have all their buddies that they are feeding them information. Hey, the orange futures are going to be good. The orange futures are going to be bad. In this case, the scuttlebutt was that inflation was going to be 8.3 on the latest report. It was 8.6. That's bad. The ridiculous part about that is the stupid experts were saying, 8.3. The stupid experts of the government came out and said it was 8.6. Janet Yellen, the Department of the Treasury, said that, well, she just recently, that she didn't realize how bad inflation was because she's a stupid expert, right? Some of the people that I've listened to on the internet, and these are just other talking heads like myself, have put inflation probably higher in the 11% range. So you're being fed a crock of shit, and because everybody is relying on these stupid experts that think that they understand things to explain the economy to us, when the economy is rather simple. If you get out of people's way, they will figure out a way to take risk for reward, because otherwise you get stagnation of something like the Obama economy, where you're suffocating people, or in the case of the Biden economy, where you're actively taking measures to destroy it. So in the case of the Biden economy, and this even you can't take Trump off the hook here, is when you start printing money and letting it go into the wild, all you're going to do is create inflation. And again, the stupid people thought that was a good idea when everybody else on the internet is going, "What are you doing?" When was it 40 to 80% of all US currency has just been printed up in the last couple of years. It's ridiculous. So finally you get to the point where the stupid experts in the government are like, I have to do something about this. So what happened yesterday was all the experts on the floor who say, I know somebody, were like, well, the Fed, in order to combat inflation, is going to adjust interest rates by 0.5. Well, what happened was the rumor came down to them, the experts, the suitcase in trading places came down, and now everybody's concerned that the Fed is going to adjust interest rates by 0.75, which is worse than was already bad, because everybody knows that inflation is bad because they're trying to catch up to the problem that they had caused going into 2020 because they're stupid experts and we believe them, right? So moving forward, there's all this other stuff going on that I don't necessarily feel the need to pull up here as I talk to you, because it involves stuff that I don't really understand about bond markets and how you invert 2-year yield bonds with 10-year yield bonds, and that means there's a good indication that a recession is coming. And again, a recession is just 2 quarters of downturn in economic growth. So we're just waiting on someone to tell us something that we should already know, that the economy is shit. We're already in a recession. We've already been in a bear market. We had a crypto crash yesterday, and that's going to cause ripples into the economy, because as I was listening to young Ripper on the internet today, he's just a random internet guy. He called the economy, he said the economy is not like a light switch. Well, what I tell everybody all the time, the economy is not a machine that you can turn on and off. It's not a car with a key that you can turn. And our stupid experts decided they were going to treat the economy like a machine that they can turn off for the pandemic and then turn back on when it was going to when they wanted it later, and it was just going to pick up and start running however it wants. But that's not how the economy functions. Anybody with common sense could go, that sounds stupid. All the stupid experts were like, no, 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 trust me, I know how this functions, I'm an expert. So in this case, all these sectors of the economy start shutting off one by one because of the shutdown. And then you expect, like, even though we haven't entirely turned the machine back on, that there aren't going to be ripples effects like the crypto crash yesterday going out into the ether and causing, another portion of the economy to have a problem. So we're dealing with the ripple effects of the economy being shut down in the beginning of 2022 manifesting now, just like we're going to deal with the ripple effects of what's happening now in the future. And I will just go out on a limb and say that we're not going to see an economic recovery until maybe 2024 if the election goes the right way, maybe 2025 depending on, if the groundhog comes out and decides to see its shadow. So in this case, we're seeing a whole bunch of stupid people looking at tea leaves after things have already happened. Anybody with any common sense has already gotten the fuck out. Like BlackRock came out, well, I shouldn't say BlackRock, certain experts within BlackRock, and I can actually show you this story so you know that in this case I'm not making stuff up. Certain experts in BlackRock came out yesterday, and BlackRock isn't buying the dip as volatility climbs in a sinking stock market. So the world's largest asset manager isn't waiting in the sinking stock market to buy the dip as the S&P 500 trades into bear market territory. We're not buying the stock dip because valuations haven't really improved. So right there's a risk of Fed over tightening and profit margin pressure are mounting. BlackRock strategist said in a note Monday. They know that it is going to get worse, and there's no point, because a company like BlackRock, an investment company like, an asset managing company like BlackRock, normally would see this dip and lick their lips and jump in because they have the capital to start buying everything while it's low with the anticipation that it's going to go high, right? and they're not going to buy right now because they realize it's probably going to get worse, right? These are your stupid experts. At the very least, they were just waiting on this to occur so they could jump in, because these stocks, part of the reason why you're seeing this dip in the stock market, as I clear things out, is certain stocks, because of their ESG scores through investment companies like BlackRock, and I'm going to show you Netflix here, have been uh, operating in such a manner that they haven't been concerned with their actual profitability and their long-term business model. They have been concerned with their ESG scores, hiring the right people, putting out the right product, pretending like they care about the economy. So when I show you the 5 year stock price of a company like Netflix, you see that it actually climbed to a peak in about November of 2021, and then it's dropped precipitously, about 500 points, because I follow pop culture, because I'm a nerd, but also because, like, the tea leaves there said, "Hey, get the fuck out of the stock market." Because a company like Netflix went from, "Hey, I have to have Netflix because they put out this good content," to, "I need to get the fuck away from Netflix because everything that Netflix puts out is hot garbage." And that's not because, well, they were good at making stuff and now they're bad at making stuff. It's because they've hired the wrong people, and they hired the wrong people chasing the dragon of ESG for companies like BlackRock, because BlackRock owns 20 to 30% of Netflix. And there are other investment companies that own large stakes in companies, because when we talk about ESG has been taking a hit, the sustainable investing has been taking a hit. When I pull you up Twitter right here, this is the Twitter stock. So mind you that Elon Musk made hay. This is the 1 year on Twitter. Elon Musk made hay about April 4th. So you see a spike in the price of Twitter when Elon Musk said he was going to buy Twitter. So it jumped. And now it's going down again because the sale becomes very volatile, because Twitter's been trashed, because they've allegedly, I should say, for legal purpose, allegedly they've been manipulating the amount of actual users that they have versus bots and spam. This is what's going on. And a company, certain investment companies, because BlackRock came out and bought more shares of Twitter than Elon Musk to hedge their bets on him, buying the original 10% that he bought when he said he was going to buy it and take it private, because this ESG stuff is so trash that him coming in and shaking the spider's web is causing ripples within the entire community. Because I'm going to show you Disney next, and here's good old Disney as I close out. Uh, so you can see Disney, and they're, look at that. Like, I mean, they started, and I could actually go 5 year on purpose, because you could go all the way back to this dip right around the lockdown, and they've been slowly climbing to about a high in March 2021 of 197, and now they've dropped over 100 points. If you've been following pop culture, Disney has, for lack of a better way, gone woke, and now they're going broke because people don't want to buy bad products. In this case, Disney is trying to transition over to a streaming model, and that streaming model is broken. Um, there's probably already market saturation going on with streaming, and on top of that, you have to have content that people have to have. And when you've been actively destroying your intellectual properties for ideological reasons, you're probably going to be missing out on the ability to to have a sustainable business model that's for profit. Because now all of your customers see your brand is tainted, and that's what's going on with Disney. So any stupid experts should have realized all the way back when Disney went woke that there was a problem going on with the company, and been selling shares off of Disney. But what happened over the course of the pandemic is shares of Disney were going up, because the stupid experts were saying, well, once we turn the machine back on, the machine will pick up right where it left off going into the pandemic, and everything will be fine. So everybody was investing on this idea that the economy would keep going when there was a bubble going from over investing prior to the pandemic, and then that over investing just carried over during the lockdown. So this is what's going on. So we would be the antagonist, we the people, the stupid people, the plebs, the way that they see us. We would be the antagonists of actual of the movie Trading Places. We would be the antagonists, and certain other people who saw this coming that invested it correctly are reaping the benefits of the bubble bursting right now, because what we're getting is the bubble bursting. Um, that's essentially in a nutshell what's going on, and a lot of people have been talking about this, well, for a while. So you see that the Forbes article that I had pulled up, if I still have it pulled up, I probably don't. The Forbes article written back in 2018, it's talking about an impending bubble, and we're overdue for an impending bubble in 2018. Well, 4 years later, here's your bubble. And there's a reason why it took this long to get to the bubble, because there are people that were artificially sustaining stability through investment companies like BlackRock, uh, telling everybody to buy because of good ESG scores when the company's actual business models were garbage. And it's getting to the point now where we're actually having to get honest evaluations of the economy, because the media has been propping up the Biden administration's poor handling of inflation because of poor policies during the Trump administration, on the back of a lot of risk that was taking place after the perceived return of oxygen to the economy after the Obama administration suffocation. So this is a long process, and there have been a lot of stupid experts that have been making bad calls about this, and a lot of common sense people that have been predicting this for a while at this point. And now, you know, everybody needs everybody needs a declaration of a bear market to turn around and say, well, I guess the economy's bad now. Well, at what point have all these other uh, 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 signs and signals been not telling you that the economy's bad, right? I mean, that's my question. So just to get into it a little bit more, I wanted to give this more of its own time to talk about this, all of the stuff that's going on, and if these companies don't get rid of their ESG, and to as a good indication of what's going on, I'm not going to pull it up. Like companies like Disney and Netflix and even Twitter with the Elon Musk stuff are purging these woke assholes from their companies, so hopefully they can stay afloat after this bubble burst. I'll even go a step further. I was going to wind down and end, but I'll go a step further. So, uh, after the Obama administration left, the Trump administration came in, and everybody said, "Yay, we get to actually take some risk and grow again." They went out and they hired a whole bunch of people on diversity initiatives to essentially help blood for the ESG gods, and they hired a lot of really bad people in job positions that are not necessary for the company. Again, we'll call them fake jobs. And all these jobs did was act as parasites to destroy efficiency for the company. So again, that came home the roost. It only took about you know, a decade of stupidity to get to the point where these companies cannot function. And those are going to be the first people that get fired because they're so inefficient. They just take up space, and you're going to have a whole bunch of people let out into the wild of unemployment with dumbass degrees from, ideologically brainwashing colleges that can't get jobs because they have a degree in, like, underwater gender studies, that they can only go get a job at a company like Disney, working someplace for, in a department of gender equity, and you know uh finances. and that job's going to get purged, hopefully, to move in the direction. But if you don't get these people out now, they're going to go back to these fake stock evaluations and poor business practices that are going to lead to this down the line again. So anyway, this is the type of stuff my co-host and I talk about weekly on the podcast. I want to do this on dedicated video. It's been about a half hour. I'm getting tired, which means anybody listening is probably going to get tired of this themselves. So if you're still here, I appreciate it. If you could go, you'll hit those buttons on the bottom, leave me a comment. That would be awesome. Otherwise, I'll see you again either on an own special video or a daily podcast or weekly podcast that we have on this channel. Hopefully we're getting better with our content, and we'll gain your trust, and we'll be able to say more I told you so's in the future, which would mean that there's actual informative, transformative reasons to listen to our stuff. So anyway, I'm Walter. I will talk to you guys later on some other time, and I'll end the broadcast.